Good morning, everybody. Welcome to the Flow Show. Bit of a quieter morning this morning. Maybe the eye of the storm we're sitting in at the moment, but it's only Tuesday, so a bit of peace and quiet won't go amiss. Morning, Kate. You surviving?
Good morning, Ryan. Good morning, everybody. Yeah, surviving. Oh, missing a few opportunities, maybe intraday, but that's the fate of a trader. But no, all in all, pretty okay with all the moves, and as you say, it's this morning a bit quieter. Um, I have this 2021, 2022 deja vu concerning tariffs. Tariffs is the new transitory, it seems. They
Yeah,
they
yeah,
come and
absolutely.
go very, very quickly.
Yeah, yeah. It market's a bit like fishing at the moment, and you can't catch them all. So you've got to have your rod in the water and hope you get a whopper. But yeah, plenty of opportunities around these headlines the last few days. But yeah, it's not. I don't think it's going to be a daily occurrence. I think we might have a little bit of a pause now. That there's been some reprieves, but we'll get into that shortly. Mr. Ueda was speaking in Parliament overnight. Not a whole lot of interesting comments from him. He did say, though, that Japan is experiencing inflation and is no longer in deflation. Have they actually declared the end of deflation yet officially, or is it still bubbling, Kay?
That's like the European relief program, Ryan. I don't know when they will, when they will declare victory. They've said several times they're on their way to and close to. But perhaps, who knows in the upcoming weeks after the Yeshiva Trump meeting coming up.
Yeah, exactly. There's been some comments out of China, but they're all related to the Trump stuff, so I'll save those for a little bit later. We'll get into a bit of data that we had out yesterday, particularly in the US. We had some PMIs out there. Canada first, a little bit of a pullback to 51.6 from 52.2. Over in the US, we had the final S&P global number, which showed a decent improvement to 51.2 from the flash 50.1, moving into expansion or further into expansion than the flash number. Construction spending looking positive there. And then the ISM that moved into expansion as well, was expected to look less crappy, but ended up coming in okay. New orders up strongly as well. Sorry, employment I'm pointing at. There's the headline number, 50.9 into expansion. Employment doing well. That also expanded. New orders, that did well too. Prices paid ticked up also. So a lot of green there coming in from the US data, which keeps the well, I don't even think we made the soft landing. We're in potentially in takeoff mode. Reading through the comments from respondents to the ISM, most of them saying that generally conditions were favourable. There's been stronger growth than expected for the time of year. Price pressures are still evident, and some firms are even looking at getting back to increasing staff again after a pause. So, all positive signs. Now, there is obviously some caveats there. We may just be seeing a little bit of a New Year pickup, part of the running ahead of Trump tariffs, which were coming, not coming. So that might be behind this pickup in manufacturing. But on the whole, positive news is positive news. And we keep seeing positive news out the US. Fed Collins says there's no urgency to lower rates again. Fed's Bostic, current degree of uncertainty has broadened considerably, and he's not expecting the path to inflation target to be a straight line, and he's prepared to wait a while before cutting rates again. Straight in to the Trump stuff. So tariffs were going on to Mexico and Canada, and now they're not. Mexico's Shine Bomb was the first out with the news saying that tariffs are paused for a month, saying that the US has committed to avoiding trafficking of high-powered weapons to Mexico. So a bit of quid pro quo going on there. It says the US and Mexican teams have started to work today on security and business. She said Trump insisted on addressing the trade deficit during those talks, but she pushed back. She asked for a permanent pause for tariffs, but they agreed on 1 month instead. So Trump pushing. He wanted to get the trade talks in there as well, but no, they're keeping the subject to that. Canada's Trudeau also dropped a bomb that Trump is going to pause tariffs for 30 days. Both sides saying they had good conversations. So we've got a pause. That's obviously been reflected in both Mexican peso and Canadian dollar. And we've gone back into several boxes in terms of price ranges. So Trump was out after that. He said that he's made a lot of progress on Russia and Ukraine, but says he wants guarantees of rare earth materials in any Ukraine deal. Says he wants Ukraine to give us or give the US rare earths. And for those that do not know, Ukraine is a hotbed for rare earth materials. If you wonder why everyone's fighting and standing on the side of Ukraine, it isn't just because of the humanitarian fallout. It is a very, very big country for rare earth materials. Trump was pretty busy. He signed an executive order to create a sovereign wealth fund. And says TikTok could go into that wealth fund. On the subject of Musk getting TikTok, he says he won't let Musk go to places where there is a conflict. So that's perhaps a little bit of a slap back. He said nobody is out of tariffs. He says he's going to probably speak to China over the next 24 hours because China tariffs did go on. They are on 10% on this, that, and the other. And he says that they were an opening salvo and they will go up if we can't make a deal. Obviously, we got a response from China. Their UN envoy said China is firmly opposed to an unwarranted increase in tariffs by the US and that Beijing may be forced to take countermeasures, which they did start doing. They have opened an investigation into Google over alleged antitrust violations. They announced export control on tungsten-related materials and they plan 10% tariffs on US oil. Now, all this tariff chatter apparently has got China's exporters rushing around. They're speeding up getting stuff out of China to beat Trump's tariffs. So we can probably see that coming in and reflecting in the trade deals. Okay, another headline jamboree last night and yesterday afternoon.
Yep. I think, well, it's undeniably positive on the Canadian and Mexican side. And where we could add a little positive note is that none of the three parties, US, Canada, Mexico, has already threatened to leave or to break up the USMCA. So that's perhaps something additional to watch for. And again, as you say, we are not done. He said it that they are not done completely with everything, but of course he has to save face. But it is something, and you spoke about that as well. There could be those second rounds if things don't go according to plan come March. And I think the bigger worry, no, it's going to be like the one that breaks everything is that is if ever he would say like, okay, USMCA is dead, and we need to speak about something more serious and tearing stuff apart, agreements and things. Then I think really the shit would hit the fan for Canada and Mexico. But in the meantime, yeah, both trading much more positive, which is logic, of course. Regarding China, I'm not out of everything because, as I said in the room as well, it's they're slapping tariffs on each other, talking hard, and then Trump signing these executive orders saying that they are going to create a sovereign wealth fund, and the first thing that may enter into the sovereign wealth fund is 50% of TikTok, which is China owned. So I'm I'm really somewhere in between two chairs. Yesterday we spoke on Face about um, China letting or not yet letting go the Chinese yuan, and we see the reaction. It's not fallen out of bed on the tariffs. They still keep a firm grip on that, and I reckon, depending on how it evolves on the tariffs, that may be also one for a latter stage when China will decide what to do with it, really.
Yeah, it's been a bit of a weird situation with China. I think this is probably one of the most complex ones for us to
Mm,
get our head around because we obviously had this. We had loads of tariffs going on last time, which Mark in our room says they've still got in place.
yeah,
They
yeah.
did get a deal together on agriculture. China was going to buy X amount of this and that, which they never did.
Hmm.
So there's a situation where there's deals to be done, but is China going to adhere to those deals, or are they going to
Yeah.
just ignore them like last time? And what does Trump do this time to make sure those deals go through? So if there's any one that might end up more of a mess, I think it's the US and China. But as you say, dollar China or the yuan not reflecting that as we've seen versus the CAD of Mexico in terms of negativity.
Mm,
We got up to that prior highs. Um, Late on Friday and we Monday, and we couldn't get through.
mm.
Whereas all the others blew through their respective levels. So, do you think they might have had a few fingers on buttons over there?
Well, I would suspect that they keep it in. I haven't really seen too many direct comments from the PBOC through all of this, so they may um, stay a bit behind the scenes right now and ready to come out when it's needed. So they will probably be instructed by the highest officials of China, if and when they would decide to let the Chinese yuan weaken. The one thing though, and of course it's directly linked to those tariffs as well, but that apparently US closed a bit of a loophole. There's this thing called minimis, where um, goods coming in from various countries, under which China as well, are not taxed or not tariffed in the same way, or actually have no tariffs, if they are less than a certain amount. I think it's somewhere like $800 or so, if I saw that correctly. Closing that loophole may mean a difference, because I can lively imagine that they were using this loophole massively when shipping stuff straight to the US or via Mexico. So that's an interesting one to also note. So that's a bit of the, I would say, showing the harder line still. Yeah, as you say, it's complicated. It's more complicated with China because there's obviously a lot more going around in volume. Sorry. So yeah, I mean we're not out of it yet. I don't think the Chinese yuan is, if you look at the value of the currency, I don't think the Chinese yuan is ready to materially strengthen, unless all of a sudden tariffs go away and we have like a really good meeting between Xi and Trump. But is that even possible right now? Because the Chinese involvement with Russia and stuff, I don't think Trump can politically be buddies with China, or at least not let it show, because of the Russian situation as well.
Yeah, it's also worth noting that China economically is in a very different position today than they were in the first Trump presidency.
Mm,
Do you think that might be in their thinking? You know, if they get into an extended um, export battle, let's call it that. And it's not just the US who are gunning for China and sanctions and all that sort of stuff. Europe, Germany, all the rest are moving away from China. Is that something that might bring them to the table and get them doing something?
Yeah, I mean, the situation in Europe is a yeah. I don't know. I mean, they've spoken so much about deleveraging, not decoupling, and we really well know that the big German car makers need China. Even Italy has kind of tighter links with China than one could imagine as well. The European situation is a bit of a strange one, and there still lies the risk that we can't forget. It can be pushed towards the back a little bit because now we are thinking about what is Trump going to do versus Europe, but. The European Chinese relationship could actually be influenced quite a bit if Trump decides to slap tariffs on Europe. And yeah, as I said, there could be the risk with tariffs, and that's why I said we need to watch different blocks, how he handles those different blocks, and Europe being one. But there is this risk that he drives allies or partners into arms that they weren't in before. So I think there's still a big risk there, and also something that we need to watch very carefully between Europe and China because that story is not over yet.
Yeah, absolutely, absolutely. Right. Well, in other geopolitical news, it's all we to deal with these days. UK spokesman for the government was out kissing butt, saying that the UK is committed to free, open trade and have a strong US relationship. They want to build on the trading relationship with the US, saying that the current trading relationship is fair and balanced. The Telegraph got in on the Tariff Act, saying that Trump was considering hitting the EU with 10% tariffs on imported goods. Haven't really heard too much more on that front, but 10% sounds quite a low number, but it's the same level as China being a bigger entity as well. That might be the reason. One of Trump's bum fights is going to be with NATO, and the head of NATO's Rutte said that the new defence spending pledge from NATO countries will be decided later this year, and it will be considerably higher than 2% of GDP. We shall see. Mr. Trump wants at least 5% from other NATO countries. So we'll see what that gap is between the current 2% and where they set it, and Mr. Trump's line in the sand. And just to show you how the Trump tariffs seep into the bedrock or thinking of countries, when those Trump tariffs were coming on to Canada, the Ontario government threatened to cancel its Starlink contract, which is obviously with Musk for that trade war, and threatened to ban US companies from provincial contracts. Obviously, that all got kicked into touch, and that's on pause as well after the month's extension to putting tariffs on. But this is, as I say, an indication of how these things can feed through into other parts, other areas. Ontario going directly after Musk on that one. That's it as far as I've got from the news. Probably plenty I've missed. Kay, you got anything else?
Nothing world shocking or market moving, I would say, in the meantime. No, I don't think so. We had a bit of I mean, it's just a headline. We had a bit of a positive, and perhaps that's also the reason why Europe crosses are coming back. Say the EU Trade Commissioner this morning, Sefcovic, he said that he believes they can dissolve the trade issue with the US with talks. So I guess that's a bit of on the bandwagon of what happened with Canada and Mexico. He's sounding a little more positive as well.
Yeah, and that's exactly what we were speaking about yesterday. You know, we're seeing a reaction in other currencies on the back of the pause of Canada and Mexico. The market thinking, well, if they get something, everyone else is going to get something. Don't get lulled into that false sense of security. It's still a risk that Trump comes out, as he does, sitting on the toilet with his mobile open, and decides to drop 25% tariffs on Europe by the end of the week. And then you're going to see a lot of big moves happening again. And we've been saying it, don't think it's all over just because two countries have got a potential deal. These bum fights are going to keep continuing. But by and large, we're getting a bit of respect. Oh, I still got my squiggle on from yesterday. Let's give her that crap. We're respecting levels at the moment. We respected the 102 level down there over all that stuff. And now we're respecting the zone on the way back up. This was the area a lot of traders were looking at. A lot of people wanting to buy 130 or 103.50 down here. Okay, but fortunately, I don't think many did because they never got a chance. But now look where we're resisting, right into 103.50. So that shows you how important that level was and why everyone was looking at it on the way down. Now people are looking at it on the way back up. So this zone is going to be a bit pivotal. If we're not getting through there, then in my view, it keeps the downside in play. But maybe we're going to see a bit of ranging while we wait. Everyone waits to find out what's coming and when. So Euro's made a bit of recovery. Dollar CAD, big, huge move. This level up here was the massive 2020, 2024 double top. Absolutely huge. Didn't give a monkeys over all the headlines. So this is again an example why you've got to be careful with the text. Headlines, big market moves, that doesn't give a monkeys about coloured lines. What you can do though is look at them afterwards to see if the texts are playing ball when the dust settles a bit. So if we get any natural move back up to this big double top, and I'll just show you that quickly so you know what I'm talking about. Oh, need to put it on a weekly. Look at that. So there. If we get a natural move back up here, maybe on data, that sort of thing, that might be a different kettle of fish. It still might prove to be one hell of a triple top if we don't go back up there again. But in the meantime, we are right back in the range. We're back below this 144, 60, 70 area, obviously back below 145. And now we're in, I'd say, Kate, sort of like reverting to mean almost. We've got, these are all the fundamental moves. This is all the headlines. And now we're back to sort of where the market was balanced fundamentally between the Fed and the BOC.
Yeah, exactly. And we're seeing it on quite a few currency pairs. Obviously, that was a very, very direct move on the back of those tariffs, and then the delay in the same tariffs. Now and as I said, and we said already so many times, we're not out of the woods on anything. So there is going to be a bit of a delay to get back to fundamentals. In the meantime, we can put in another few of those. You know what? I think we saw perhaps the biggest move there, the wildest move, because now we know that there can be tariff yes and then tariff no, and then we've seen the move. It can happen, and usually the next move, the market being already a bit more accustomed to what can happen in the politics. So the next move may not be as big anymore. So if Trump comes out and says like we are buying our way out of the moves, you're going to see a spike, but I doubt we make it a really materially from here. I doubt we make it back above that first spike around 146 in the immediate. Now fundamentals have been pushed back, but they will come back after a while. The market will, as I said, the market is very sanguine, and money doesn't really care or doesn't really have an emotion. So once the market gets used to something, the volatility will not be as big as it was, but we are slowly and surely going to get back to fundamentals, but it is going to take a good few days.
Yeah, well, I don't know if it's going to take that long, because we've obviously got a heavy data week this week as well. And you know, Ali's
Yeah.
making the point: what's the bias? Do you buy dollars? Do you sell dollars? He's not sure. Markets are focusing on politics rather than data. Okay, markets are like goldfish. Okay, we've been trading all this for the last week or so. We've been trading this tariff stuff. There is now a pause for a month. Okay, so the market can now go back to focusing on other things. So it's more inclined to trade the data this week than the tariff threat in currencies like the MEX and the CAD, because the market knows, right, well, we've got a month to play with this crap. Yes, there's still headline risk, but there's not as much headline risk now as there was Friday, Thursday, Friday, Saturday, Sunday. Okay, so that risk has been reduced. So now we can probably go back to trading in these ones, at least more on the fundamental. So you can rely more on your tech levels. You can rely more on your ranges and whatever you're looking at to trade between the data, because the data is there. It's going to be there before Trump. It was there before Trump. It's going to be there after Trump. Central banks are going to do what they do. They're going to react to everything, but the fundamentals are an ongoing situation. Okay, Trump tariffs here and there. In the grand scheme of things, it's short-term news in terms of headline risk and that sort of thing. It can develop into affecting the fundamentals, but again, that won't be seen until months down the line. So yeah, we've got a big data week this week. So for these two pairs or these two currencies, Canadian dollar, Mexican peso, I think you can probably breathe a bit of a sigh of relief and maybe trade these more on a fundamental technical basis than you could before. Obviously, mentioned China, how that hit the level and came back. Dollar Swiss was an interesting one as well. You know, Swiss not really in the game in terms of tariffs yet. Got up to a resistance level up at the 92s, couldn't get through there. We're going back towards 91s, and we're just below that as well. So, you know, some currencies are still, you can rely on the text, others you can't. The crosses as well, euro sterling, another one, you know, completely or nearly completely washing out a lot of this move that we saw. This move was on pound weakness. This one was on euro weakness, more so on euro weakness. Coming down, tested a big figure, held it down there. Can we go a bit further? Yeah, we've got the Bank of England coming this week, expected to cut. So if they cut, tariff threat on Europe, you get a rally in this one, mix the fundamentals and the tariff threat, and that might be a rally potentially worth selling, depending on what headlines we get come Thursday. But these are the sort of opportunities you want to be looking for now. This is, Ali, this is how you move between trading fundamentals 1 minute, trading the headlines another minute. Okay, Europe's not out the woods with the threat of tariffs. Okay, they haven't got 1 month's grace potentially that we know of. Cable, that's doing its old half double O's again. Let's come in a bit. We had the bounce, got up to 124.50. That's where we run into trouble. Back down to 124, little knock through. Then we're back above it again, 124s. So cable, I think, you know, much quicker to close the gap on this one. Tariff threat's not really a big issue potentially for the UK, but it's running into trouble up here, back where it was before we had all that noise. So you've got to look at that. Yes, mate.
Did I hear that right? Did you just say close the gap?
Yeah, close the gap, because everyone's talking about the bloody gap.
No. Don't start. Ryan, please don't start. Okay, don't start.
Listen, when I start doing tech on yields, then you can put me in a hole. Dollar yen, just a quick view. I'm sure Kay's got a thing. You know,
Yeah,
from one of the most volatile currencies of the majors over the last few months, we've gone backwards, and this is the least affected, one of the least affected currencies at the moment. Yeah, we've still got some decent ranges, but we're not exactly flying around like some of the others, are we?
No, exactly. I'll Yeah, there's a couple of very interesting levels there. But yeah, we the dollar yen is consolidating in the range. The yen crosses are the main movers of the last few days. The rage was asking euro yen. I've got the euro yen. I'll have a look at them. But it's those are the main have been the main movers. And for yeah, that's what we were saying. The tariffed against the non-tariffed, different blocks here and there. We had a bit of a wobble as well on China because whatever we may say, they have reduced a bit, but there's still a big trade relationship between Japan and China. So it can move on Chinese headlines as well. But yeah, the dollar yen is stabilizing. There is this thing about the dollar yen, and last week I was thinking about those tariffs and saying like, okay, the yen should strengthen if the rest gets tariffed. It did happen, but it didn't really last that long. And I think there's the other thing that I said, it could be that this upcoming meeting between Ishiba and Trump, which is slated for the 7th, I think, um, that could see a bit of a move in the yen as well, because they've already said, the Japanese, that they will continue to invest and buy US. They were asking for more LNG as well. And I think there may be your next move coming on the yen. And it could be, I'm starting to think now that it could be this actually could be helping dollar yen a bit, perhaps. And if we get a break above 156 on the back of this meeting, then I think we could see a bit of an acceleration and get some volatility in the yen, back in the yen, in the dollar yen.
Yeah, yeah. One more I just want to look at before I pass it over to you, mate. And that's stocks. I'm getting. I tried this last week. I tried a break trade last week, which didn't work, and I got a bit lucky because I missed out on that gap, fortunately. But I'm looking at it again. I think if we're going to break up through 61, we're not pulling back too far. There's certainly nothing massively bearish what's going on in stocks, and the end game is for Trump to get deals done with all these countries. The tariffs are a threat. And if he does get deals done with Mexico, Canada, China, Europe, whoever, I see there's no reason why stocks don't continue on their merry way higher. So I'm going to be looking, I think, for another break play. We did have these extensions. So the 61 is still important. We had these extensions. I think it's either got to clear 61.20 or you need to see decent holding of the 61 level as support after a break. So that's one thing I'm potentially looking at, because you can never keep a good stock market down. Right. Okay, let me punch it over to you. All yours.
All right. Here we go. Yeah, first of all, on Ali's comment about the yen, we just spoke about it. He's been trading a lot with risk, Ali. Risk has been a real directional play for the yen of late. We saw the drop in the dollar yen, where we had all those tariffs announced, and then when we got the delays, if you look at all the yen pairs, they have seen a bit of a revival there, as you can also see. Okay, gold. Since the start of the year, we are in a bit of a channel here, still very positive, all in all. But if you look at the longer term, we stopped at around, if you want to look at technicals, we stopped at around the 2618 of the 2020-2022 decline, which is around 28 and a quarter. That's where we stopped. I think the next level is somewhere in the 2860s. But I've also said that tariffs will have an impact. And when you buy gold because of all the bad stuff that is happening, or anti-inflation also. If you buy gold, you also have to look at the other side of things, and then you look at those two instruments, which are gold and silver. And if you look at it, when we had the announcement of the pause in tariffs, um, gold stopped rallying. Okay, so that's what I mean by if things go better, all relatively speaking, of course, if things go better, we can see a stop in gold because it did the whole move here on the back of expectations for tariffs, hedges against whatever supply issues also as well. But once we had a pause announced in the tariffs, it stopped. Well, it's not coming down. Okay, it's not really coming down. I think to correct, we should get back, first of all, below this 2790, but more importantly, below 2770, I reckon. If we break below 2770, then there may be a bigger correction starting. But in the meantime, this is still quite supported, but it stalls a little bit. And this one is not the opposite, but okay, we also see this bit of a channel, but which is less steep than gold, because gold had this hedge against power or inflow of buyers. Silver, we still need to break higher, but then if you go down on a tighter time frame, you can see here what happened when the tariffs are getting pushed back. Okay, so I know we had this rally because all the metals were rallying last week. By the way, then we had Trump slapping on the tariffs, and we silver actually didn't like it because of the fact that it's an industrial metal, and if you slap tariffs, if there's a risk of slowing down, silver is not going to do too well. But then we had the announcement of the tariffs being delayed, and what we can see is that silver took over from gold. That is what I explained already a number of times, and also what I spoke about in our chat room already a few times as well. I think that if there is at least a lot less tariffs, but they're not all gone because as we know, China is still there, so that may still be a bit of a break. But if globally there is less tariffs being announced also, silver could start to outperform gold a little bit. Therefore, and this is now a good level here that you can see in this 3160, 3180. If it breaks through 3180, I think we can have a bit of a run up to 32 and a half, maybe high 32s. That is how I'm looking at it right now. So lower tariffs or lesser tariffs, more delays should, in theory, be better for silver compared to gold right now. Yeah, Derej was asking about the euro yen. This is how it looks, this euro yen to me. It's a triangle. It's a bit wide, but then it's euro yen and it's yen, and so we're hanging not too far from the middle of the triangle, Derej. That's telling us that we don't know right now. We had the move down on the potential tariffs already a few times as well. So for the time being, we're in between. We're turning around this 161. I would say for the medium term, we need to break out of 164, 4 and a quarter, or on the downside, get back below 158, 157 and a half, and then it's probably going to look quite bad. In the meantime, this to me looks like we are trying and not really sure where to go really. Okay. Did you cover the euro dollar, Ryan? I haven't seen it. Yeah, yeah, you
Yeah,
did. You did. You did. You did. Cable as well. Euro sterling, bit of an area we are in. Maybe quickly the Aussie and the Kiwi, because yesterday I spoke about the 6170. We flew through, and then overnight we came back to retest it, right? And it held again. So this 6170 is now your support. top side 62. We're turning around this little level here. I'm not sure whether this is going to really play out at some stage, but if we get through, let's say 62, 30, 35, we could start to see people trying to play this, and then why not go and try for it to push a little bit higher. Kiwi looking pretty similar, and but we are not yet back into this little channel or so. We need to get above 5620. If 5620 goes, we're not very far away, and then we could see perhaps a little bit of a push. But there are many levels on the top side now, and a lot will of course depend on what Trump wants to do. And perhaps you know, we do have numbers out today, right? We have the, oh no, that's tomorrow. No, the durables today.
Jolts we get today.
Yeah.
Yeah.
Oh, Jolts, yeah. Jolts, maybe a mover. Durables, forget it. And then we move over to tomorrow, where the bigger stuff comes out, right? The ADP and then the ISM services. So perhaps we need to wait a bit until tomorrow to see clear. For the rest. Oh, perhaps look at the mix relatively quickly, because this has been an important top, in my opinion, around here. Okay, the one that we saw on Sunday night, Monday morning, back below 21. The figure on the dollar mix, it started to look a bit iffy. Now we have to look at the underside here, and that's around 2020. And I would say also 2010. Those are two levels that we need to monitor in the dollar mix. I would say for the time being, this looks to be really well. We went to test the top of the trend line, and it looks to be a bit of a fakey breaky. I'd say any move back, unless things go really pear-shaped with between US and Mexico. But unless that happens, I think any retest around here will find sellers. Similar to the euro mix, although of course Europe will have a say in that, whether we see tariffs or not. In this one, that's quite interesting for me. Sorry, we never broke above really the trend line. Very briefly peeked our head above, but then we came back quite quickly. And I think similar to the dollar mix, we are going to find a bit of difficulties to get back up there. I would already say around 21 and a quarter. Look what's happening for those trading crosses rather than dollars. 21 and a quarter on the Euromex could be an interesting one to watch, which is about somewhere in between here. If it goes back above, perhaps Europe is safe from tariffs as well right now, and then we can see a move back up here. But then you have the Mexican side as well. I think over the next course of the next days, for as long as uncertainty exists over European tariffs, there is a case for it to go back and test the lower side of this little channel here, which is around 2090, 2085. And I think I've done it. No other comments? No, I haven't seen any other comments. That's it for me, really. Back over to you, Ryan.
Yeah, thank you very much, mate, as always. And yeah, we'll call that a day for today. Have a great trading day, everybody. Let's hope it's a bit of a quieter one for today. We have a little bit of a breather, but keep your eyes on those headlines, boys and girls. See you all tomorrow. Have a great day.